What the market isn't telling you about 2026 is showing up right now in Anthony Scaramucci outlook. And if this one angle plays out, it could flip the narrative for Bitcoin and the whole crypto space. Today we break down what that means, starting with Scaramucci's own prediction straight from the source.
So I'm a still believer in the don't fight the Fed approach to market activity. And so the recent inflation numbers and the decision by the president to put a Fed interest rate friendly chair in place. And of course, Jerome Powell's leaving in May of next year. And so the president has the opportunity to do that. I think any one of the picks that he's looking at, any one of those, in my opinion, I think would be setting the country up for 2 to 4 interest rate cuts next year. And so it would be very hard to go against the market. Yes, you could look at metrics and say it looks expensive. In some cases, particularly some of the Mag 7 looks very expensive. But if you're going to cut 100 basis points off of the interest rate cycle, it could steepen the curve, which is a little bit riskier, but I still think the curve's reasonably steep right now. But to me, I don't know. I got that as a buoyant market in 2026. I'll say something that's a little bit cynical, forgive me, but you do have a situation where the president's going to want to win those midterms. So he's going to flood the zone with capital. He's going to drop interest rates. He's going to try to perk up the economy to get people to vote with his team come the midterms. That bodes well for the stock market. I think it bodes well for the altcoin market, and I think it certainly bodes well for crypto, Bitcoin in particular.
Any Bitcoin price prediction with a 1 year outlook? Hey, if we record another interview 1 year from today, what do you think the 2026
Yeah.
high for Bitcoin will
Well,
be?
I mean, this is my problem. Let me. Can I give it to you from under the desk? Let me hide under the desk while I'm giving it to you because I have been so wrong about this. And I tell people I'm right directionally, but I've been wrong on timing. I thought we were getting the spot ETF in March of 2022 because we got the futures ETF in November of 21. And if you looked at the laws, that's what should have happened. That's the reason why Gary Gensler actually lost the lawsuit. You know what I mean? And he lost that lawsuit to Grayscale. So it's very hard to predict these things timing wise. But here's what I like going on. Remarkably bearish sentiment going into next year. Up, excuse me, up against the backdrop of real rate cuts. So I'm going to stay to my $150,000 price prediction. I'm off by a year, I think, but I don't think I'm going to be off by much more than that. I think we get to 150 next year. Remember, you need a slightly less OG selling, interest rates lower, and the consistency that we are seeing in ETF flows. And I don't think that those flows are going down. If anything, the Wall Street selling machine, Aaron, is just gearing up. And I think we're going to have robust net inflows to those ETFs next year. So 150 shouldn't be out of the question. And I will tell people, because I put my money where my mouth is, in the last month, I've bought 4 more Bitcoin for my family. And so I am putting money in at these levels, expecting higher prices.
Interesting, interesting. And you mentioned how with these rate cuts and everything else, altcoins could be doing better, at least quality ones. And I know that you have gone deeper into Solana, into Avalanche. You've liked Algorand in the past, but
Mhm.
and of course Ethereum. Talk to me about, listen, you thought one thing in the past, but going forward, based now, what would be your top three altcoins in order, or how do you think about it?
Well, I'm assuming that we consider Solana an altcoin because it's not Bitcoin, right? Definitionally, right? So I would say my 3 top coins then would be Solana, it would be Avalanche, and believe it or not, and it's done poorly, frankly, but it would be the Telegram token known as TON, which is called the TON coin, TON. Unfortunately, I bought it. I mean, this tells you how wrong you can be and how humbling this life is in our world. I bought that at 750. I thought I was a smarty pants. I dug in at 4, and it's now trading at $1.50. So I've gotten it wrong thus far, but I think that's going to be a token. that's used in that network. And I think Telegram is going to grow its network over time. And but listen, the macro forces in the altcoin market are also reflected in those prices.
Up next, a rare institutional lens on where the digital asset market could be headed by 2026 straight from Grayscale's own outlook as presented on CNBC. Grayscale's Zach Pandal breaks down 3 core ideas that institutional players are watching closely: macro sensitivity in crypto markets, structural demand signals, and what large capital allocators see when they model digital assets over the next cycle. Pay attention to how he frames Bitcoin's role as a reserve asset versus the broader digital asset ecosystem. Because this isn't just retail rhetoric, it's how big money is thinking about crypto's future. Take a listen.
But these are the two big pillars of the bull market that we've seen to date. One is demand for alternative stores of value. There's a lot of things happening in crypto, many different types of technological developments and use cases of blockchain technology. But the biggest asset in the market, Bitcoin, is driven because of demand for alternative stores of value, because of debt and deficits and the risk of fiat currency debasement. This drives interest into our asset class. I think that continues as we move into 2026. I don't think these macro imbalances and the portfolio shifts that they are creating are going anywhere. And then the second big piece, of course, is that regulatory clarity for this technology. Blockchains are financial technology at their heart, and so they do require a comprehensive regulatory framework to make sure that consumers are protected, that the financial system is protected as the technology gets bigger and bigger and more deeply integrated into the mainstream financial system. It's been a long journey on that path. How I like to think about it is in 2023, Grayscale won its lawsuit against the SEC over Bitcoin ETPs. In 2024, Bitcoin Ether ETPs came to market. This year, 2025, we saw the Genius Act, lots of other regulatory changes. Next year, we think that continues with market structure legislation passing the US Congress. So demand for alternative stores of value, regulatory clarity for us, these are the big pillars driving the bull market in crypto over the last years and likely to continue in 2026.
Grayscale forecasts that Bitcoin will likely reach a new all-time high in the first half of the year. Why do you think that is? And what will it take for that to happen? I'm assuming regulation advancements in that regard is a factor, but what other factors are in the mix?
Yeah, absolutely. Look, I think it goes back to those same two pillars, demand for alternative stores of value and regulatory clarity. Both of these things likely driving ahead for the crypto asset class in 2026. On the macro demand, look what's happening with gold and silver. Look what's happening with the debate around the Fed chair and interest in low interest rates. Look, it's very clear that President Trump wants to see lower interest rates. He has the opportunity to really set the agenda for the Federal Reserve by naming the Jay Powell's replacement. I think next year will be a year of dollar weakness, of Federal Reserve rate cuts, and of strength in gold, silver, kind of physical stores of value, Bitcoin, Ether, maybe some other crypto assets, digital stores of value. I think these things will all benefit from that macroeconomic climate that we are living through.
When you zoom out and connect both perspectives, a clear picture starts to form. Anthony's 2026 outlook isn't built on hype, it's built on cycles, capital behavior, and where risk actually migrates over time. And when you layer that with Grayscale's institutional framework, you start to see how Bitcoin and digital assets are being positioned inside long-term portfolio strategies, not outside the system. This isn't just about price targets or short-term narratives. It's about Bitcoin maturing into a macro-relevant asset, while the broader digital asset market evolves alongside shifting economic regimes, liquidity conditions, and capital flows. What matters most is this. When both macro thinkers and institutional allocators begin speaking the same language, cycles, allocation frameworks, long-term horizons, that's usually a signal the market is entering a different phase than most people realize. That's why we track these conversations daily, not to chase noise, but to understand where momentum is quietly building. If this breakdown added value, make sure to like the video, share it with someone watching the markets closely, and drop your thoughts in the comments below. And don't forget to subscribe. We bring you daily Bitcoin and crypto updates, cutting through the noise so you can stay ahead of the next move.